Welcome to Speidel's Federal Tax Minute. I'm your host, Catherine Sedan. This week we're covering the tips, overtime, and auto interest provisions in the tax bill that's working its way through Congress. We'll be covering the bill in depth at Speidel's summer tax webinar, and you can get details and register for this 8-hour webinar at speidel.com. The One Big Beautiful Bill Act was passed in the House of Representatives on May 22, 2025, and is in the hands of the Senate. The Senate will likely make changes to the bill that then have to be reconciled in a joint committee of the House and the Senate. Three interesting provisions of the OBBBA that were born from the president's campaign promises are no tax on tips, no tax on overtime, and deductible interest on certain auto loans. Unlike many of the TCJA individual income tax extenders, all three of these provisions would only be available for the 2025 through 2028 taxable years. The no tax on tips provision of the OBBBA would provide an above-the-line deduction equal to the qualified tips that an individual receives during the taxable year that are included on Form W-2, 1099-K, or 1099-NEC, or reported by the taxpayer on Form 4137, Social Security and Medicare tax on unreported tip income. Qualified tips would be defined as any cash tip received by an individual in an occupation that traditionally and customarily received tips on or before December 31st, 2024. No tip deduction would be allowed unless the taxpayer has a Social Security number that is reported on their income tax return. In the case of a married couple filing jointly, both spouses, even if one spouse does not receive any tips, are required to have Social Security numbers that are reported on their income tax return. The no tax on overtime provision of the OBBBA would provide an above-the-line deduction equal to the qualified overtime that an individual receives during the taxable year and a Social Security number mandate. Qualified overtime means any overtime compensation paid to an individual required under the Fair Labor Standards Act, Section 7, that is in excess of the taxpayer's regular rate of pay. There would also be special rules regarding tip income and highly compensated employees. Overtime deductions to employees would only be allowed for qualified overtime compensation if the total amount of qualified overtime compensation is reported separately on Form W-2. The OBBBA would create an above-the-line deduction for qualified passenger vehicle interest paid or accrued during the taxable year on vehicle loans incurred by the taxpayer after December 31st, 2024. The loan generally is required to be an original loan to acquire the vehicle, and it has to be secured by the vehicle. The deduction would only be available on loans for qualified passenger vehicles, and the amount of deductible vehicle interest would be capped at $10,000 per taxable year, regardless of how many vehicle loans are taken out. The deduction would be phased out for taxpayers whose modified AGI exceeds $100,000 or $200,000 for married taxpayers filing jointly. The deduction would be fully phased out once the taxpayer's modified AGI reaches $150,000 or $250,000 for married taxpayers filing jointly. We cover these provisions in greater detail in the upcoming issue of Speidel's Federal Tax Letter, a monthly newsletter plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that impact your clients. You can get more details and subscribe at speidel.com under Publications. That's all for this week. Join us next time for another episode of Speidel's Federal Tax Minute.